Welcome back, and here's your latest housing market update. In today's update, I'm going to share the latest trends from Redfin, a report that was actually just announced today, which is September 7th here. The headline regarding this article really tells us the depiction of our U.S. housing market, quite unhealthy to say the least here, and very unusual as well. It says home prices go up while demand goes down. Normally when demand goes down, home prices also fall as well. So I'm going to share why this is currently happening in today's video, plus some other indications of home buying demand regarding inventory levels, of course, and also the number of contracts being signed between buyers and sellers, and much, much more. So let's go ahead and dive right in. I have a lot to share. One thing I want to note is that they actually changed the formatting of their weekly updates here. So regarding their leading indicators, these are all stats I've shared in previous videos here. I typically make frequent videos regarding average rates. So according to Redfin, as of September 6th, which was yesterday, rates increased to 7.33%. Also, I talk about Freddie Mac's weekly rates as well, which I'll share with you guys here in a little bit. I'm also shared about 2 days ago the MBA's report regarding applications for home loans. That is a measure of the amount of people submitting applications to buy houses, using loans of course, has now fallen to the lowest level since 1995 and also down by 28% from a year ago. I also shared the Redfin Home Buyer Demand Index, Google searches for houses for sale, and of course touring activity by real estate agents showing home buyers houses for sale according to showing time. So that's not the point of today's video. I want to share this with you guys instead here, because the median sold price in the US is at $378,725, about $379,000. That's up by 4.5% from 1 year ago. It says that's the biggest increase since October of 2022. I would add an asterisk there. That's the biggest year-over-year increase since October of 2022. So one of the reasons why home prices are up by 4.5% from a year ago is because of two main reasons. Due to the fact that we have a low level in the number of houses for sale, and home prices were falling much faster last July and also last August. So therefore, that's one of the reasons why, or one of the two reasons why home prices are up compared to 1 year ago. In fact, look at this. Here is the median sold price according to Redfin. Let me just include 2020 because you can really see how high home prices are right now. So right now at $379,000, up by 4% year over year. 1 year ago, the median sold price was $362,000. 2 years ago, back in 2021 at this time, it was $340,000. And at that time, it was a 14% increase compared to 2020. Then in 2020, the median sold price was only $298,000. At that time, an 11% increase compared to the same time frame of 2019. This means on a national level, home sold prices have increased by about 27% since 2020. Also, despite the fact that average interest rates have been above 7% ever since late July this year, home prices are still up by 9% year to date this year. Also, like I mentioned in my previous videos here, every housing market's different though, right? So on a national level, we're up by 4.5% from a year ago, but it varies quite a bit depending on where you live here. So here are the metros that have the biggest increases compared to 1 year ago, based on the 50 most populous metros in the US here. So leading the nation was a giant increase of 16.3% for the 4 weeks ended September 3rd this year compared to the same time frame of 2022. That was in Newark, New Jersey, a gain of 16%. That's absolutely crazy. Miami, Florida is at 16.3% as well. Anaheim, California at about 13%. San Diego up by 11.2%. And Montgomery County, Pennsylvania is up by 11.1%. In stark contrast though, Austin, Texas fell by 6% year over year. And after that was Fort Worth, Texas, down by 2.5%, Phoenix, Arizona, Portland, Oregon, and San Antonio, Texas. What's also important to note here is that there's only 9 metros out of these 50 that are down compared to 1 year ago. About a month or two, it was about 20 metros down compared to a year ago. Now it's only 9. This is what I've been telling you guys, because I was telling you guys that this number was going to decrease because home prices were falling much faster at this time last year compared to this year. And that's why we're seeing fewer metros that are down compared to 1 year ago. Let's also talk about the median monthly mortgage payment as well, because that is very close to all-time record highs. In other words, all-time or very close to all-time record lows for housing affordability, thanks to the latest data from Redfin here. In fact, it's only $18 shy of the all-time record high for your average payment here. So they say here, the average payment is $2,612 per month at a 7.18% rate. That was the weekly rate according to Freddie Mac 1 week ago. That's an increase of 15% compared to 1 year ago. So in other words, we're at more or less all-time record lows regarding housing affordability. But this was the rate 1 week ago at 7.18%. But Freddie Mac just announced today, which is September 7th here, it says here the average rate for the week ended September 7th was 7.12%, down from last week when it averaged at 7.18%. 1 year ago, the average rate was about 5.9%. So of course, we're much higher compared to 1 year ago. But something that you guys should be aware of, though, is that 2 weeks ago, we had very high rates at, what was it, at 7.23%. That was the highest rates going back to the year of 2001. So 2 weeks ago, when rates were at 7.23%, that was a 22-year high regarding average rates in the US. So at 7.12%, we're not too far off 22-year highs. Also, when looking at daily rates, according to the Mortgage News Daily as of today, average rates at 7.29% today, down 4 basis points compared to yesterday. And also Jumbo is also around 7.3%, and FHA and VA is around 6.8%. When looking at rates or daily rates 1 year ago, we were at 6.12%, an increase of 1.17 percentage points over the past 12 months. And going back to Redfin's report here regarding average housing payments, right now at about $2,600. Look at the average payment back in September of 2020. It was just under $1,500 for a median price home then compared to now. An increase of about $1,100 more per month to buy a median price home today compared to 3 years ago. I also want to discuss pending home sales and also new listings and housing inventory. Some very big changes here. So pending home sales, which is a measure of contracts being signed between buyers and sellers of existing houses, is down by 13.3% year over year. This continues a 15-month streak of double-digit decreases of contracts being signed. On top of that, not only are we seeing a lack of home buying demand, we're also seeing a huge decrease of new listings. Not huge, but a fairly significant decrease, down by 9.3%. Year over year. That, in fact, was the smallest decrease in over a year, but that's partly due to the fact that new listings were falling sharply at this time last year compared to this year. In regards to active listings, which is housing inventory, that decreased by 18% year over year, the biggest decrease on a year over year basis since February of 2022. So let's first talk about pending home sales first, then new listings, and then active listings, because I have some information to share with you guys regarding that. So pending home sales right now, again, are down by 13.3%, around 83,000 contracts being signed over the previous 4 weeks. This is a big decrease compared to 2 years ago when there was around 116,000. Now there's only 83,000. In regards to new listings, this is a new kind of trend as well, because I've been reporting to you guys that new listings have been fairly flat for about 2 months, but over the previous week or two here, new listings have been falling here. Not the same rate we saw last year. Let me actually exclude 2021 because that was an anomaly. In late 2021, we dropped down to very, very close to all-time record lows regarding average rates at around 2.7, 2.8% back in August of 2021. And that caused the housing market in late 2021 to be much more competitive compared to years past here. Anyways, I digress. So regarding new listings, more or less fell off a cliff in the second half last year, whereas this year has been relatively flat for several months now. That's why the difference between this year and last year is actually getting more narrow here. So for example, about 1 month ago, which is right about right there, they were down by 22% year over year. And 1 month prior to that, they were down by about 26%. So big picture here, even though the number of new listings is down compared to a year ago, the difference is actually improving over the past 2 months. Going back to the reason why home prices are up compared to a year ago, again, like I mentioned, we have a low level of inventory, right? Low level supply right now, especially compared to last year's levels. So active listings, again, are down by about 18% from 2022. That's not the biggest story though, because look at the difference between this year and last year. Last year here is in black. So over the previous 4 weeks here, there was around 798,000 homes for sale. To start the year, there was 813,000. This means there's 15,000 fewer houses for sale right now compared to the start this year. That's a decrease of 2%. Look at the difference last year though. Last year this time, there was approximately 973,000 homes for sale, but to start the year, there was 651,000. That's an increase of 322,000, or a giant increase of 49% compared to a 2% decrease this year. That is one of the main reasons why our housing market last year, fell off a cliff in the second half of last year. And of course, one of the main reasons why home prices have not fallen very much this year. Let's get back to Redfin's report here regarding pending home sales by each of the 50 populous metros. So look at this though, NA. There was not a single metro that posted a gain of contracts being signed compared to 1 year ago. So it declined in every single one of the 50 most populous metros. In contrast, the biggest decreases was in New Brunswick, New Jersey, down by 32%. That's absolutely crazy. Seattle down by 28.5%. Boston saw a decrease of 27.7%. Sacramento, California, where I live and work as a real estate agent here, has fallen by 27.4% in the number of pending home sales. Also, Atlanta, Georgia is down by 25.9%. In regards to new listings increased the most in Milwaukee, Wisconsin, up by 3.9%. After that was San Jose, California, and then Pittsburgh. So this means there's only 3 of the 50 most populous metros have posted a gain of new listings. In contrast, there was 47 that posted a decrease compared to a year ago. That was Atlanta, Georgia, leading the nation, down by about 31%. After that was Las Vegas, Riverside, Cincinnati, and Seattle at 18%. They also reported that we have a 2.8 month supply right now, which is on par with last year's levels, also at 2.8 months. This is still higher compared to 2020 and 2021 though, but still remains more or less a seller's market overall in the US. This is because even though home buying demand has still fallen greatly, housing supply has fallen even more than that, which is causing to be at very low levels regarding the month supply in the US. I also want to discuss how fast or how slow houses are selling in the US right now. Days in the market is at 29 days, on par with last year's levels. So houses on average are selling for the same time frame compared to 1 year ago. One thing to note though is that houses are taking longer to sell compared to 2021 though, because at this time, days in the market back in 2021 was around 24 days. However, having said that, at 29 days right now, this is still faster compared to 2020, when at this time in 2020, days in the market was about 38 days. This means, of course, that houses on average are selling about 9 days faster compared to 2020 at this time. Lastly, let's have a look at the average sale price to final list price ratio, which over the previous 4 weeks, that ratio was more or less 100%, which means on average, home sellers sold their houses for their asking price. This is on par with last year's levels as well at around 100%. It's still below the levels back in 2021 though, when at that time, houses were selling on average 1% over asking. It's still well below levels compared to the peak that was set in the spring months of 2022, when that time houses on average were selling for about 2.5% over the seller's final list price. Now again, right now they're selling for the asking price on average. But what's your biggest takeaway from today's video? Please leave me a comment below. I'd love to hear from you guys. Also, thank you so much for watching today's video. I appreciate you. Hope you have an awesome day. I look forward to seeing you on the next video.